Okay, it is Wednesday, February 18th, 2026. Looking at the markets this morning, U.S. futures are flashing green, Japan is surging. And yet, there's this strange undercurrent of anxiety in the data.
It's definitely a split screen market, isn't it?
It is. We've got a stack of reports here that paint a really specific picture. Feels like the hardware builders are having a party, but everyone else is sort of looking over their shoulder.
That's a great way to put it. We've sifted through this morning's data, specifically Analog Devices earnings, global inflation prints from the UK and Canada, and that trade data out of Tokyo.
Right.
And the mission today is to connect these things. I mean, why does low inflation in Canada actually matter to a trader in New York? And why is one chip company in Massachusetts signaling a global boom?
Well, let's start right there with that chip company. Analog Devices ADI, they dropped their Q1 fiscal 2026 numbers this morning. And, to say it was a beat is an understatement. Revenue hit $3.16 billion.
Which is just a massive 30% jump year over year. But you have to look at where that growth came from to get the real signal. It wasn't just, generic tech sales.
No, it was driven by the industrial and communications market.
Exactly.
And we should probably clarify, when we say industrial in the semiconductor world, we're not talking about old school smokestacks. This is automation, robotics, the smart grid, that kind of thing, right?
You got it. It's the plumbing of the modern economy. ADI makes the chips that translate real-world signals like temperature or speed into digital data. So when they grow 30%, it tells you companies are spending heavy on physical infrastructure, not just software.
And they are very confident about it continuing. The board bumped the dividend by 11% to $1.10 per share.
And that makes 22 straight years of increases.
Only 2 years.
That kind of streak is rare in tech. It tells you their cash flow is rock solid. The CEO, Vincent Roche, he's guiding for roughly $3.5 billion in revenue next quarter. He's basically saying this demand isn't a fluke.
A stark contrast to some of the software jitters we've seen.
Oh, absolutely. And Moody's also dropped results this morning, so it's a busy day, but ADI is really the bellwether here.
Okay, so let's talk about those jitters, or rather, the relief rally we're seeing in the broader U.S. market. S&P 500 and NASDAQ 100 futures are pointing higher by about 0.5%. But the trigger for that wasn't even American news. It came from across the pond.
It's the global bond market doing all the heavy lifting. We got inflation data from the UK. It dropped to 3.0%, and Canada cooled to 2.3%.
And when inflation falls, bond yields, the interest rate on government debt, they tend to slide down with it.
That's the mechanic, and that is the golden rule for stocks. High yields are like gravity. They pull valuations down because it costs more to borrow and grow.
But when yields slide, like they are today,
That gravity eases up, so investors see those falling rates abroad, and they're betting the U.S. Federal Reserve is going to follow suit.
which means everyone is waiting for those Fed minutes later today to see if the theory holds. But even with that cheap money optimism, there's this whole AI disruption narrative causing turbulence in the background.
It's the nuance of the day. Capital is flowing into the things that build AI-like hardware, but it's choppy for the knowledge-based sectors, media and software, that might get disrupted by AI.
It's a tug of war.
It is. Between the tool makers and the tool users.
Which brings us perfectly to the only major Asian market open today. It's the Lunar New Year, so most of the region is dark, but Japan is trading. The Nikkei 225 rose more than 1% to over 57,000.
And that rally is directly tied to what we were just talking about. Japanese exports jumped nearly 17% in January, and the engine behind that,
AI chips.
AI chips. Companies like Tokyo Electron are just surging because the world needs the equipment to make the chips that ADI and others design.
It's also worth noting the political angle here. Prime Minister Sana Takaichi got reappointed, so the market definitely likes that stability. But it wasn't a win for everyone. SoftBank Group dropped 2.8%.
Yeah, that is the head scratcher of the morning, isn't it? SoftBank's subsidiary, SB Energy, just announced a $33 billion natural gas project in Ohio. You'd think a big infrastructure deal would play well.
But the market sold it off. Are investors just punishing a tech giant for pivoting back to fossil fuels?
It really looks like it. The market wants pure play AI and tech growth right now, pivoting billions into heavy infrastructure like natural gas. I think investors just don't want to see that capital tied up there. Not right now.
So let's wrap up the signals then. We have Analog Devices proving the hardware boom is real, it's profitable, and it has staying power with that dividend streak. We have falling global inflation, dragging down bond yields, which is giving U.S. stocks a lift. And we have Japan exporting the shovels for the AI gold rush.
And that leaves us with a provocative thought for the day. If Japan's exports and ADI's earnings are booming on hardware demand, while U.S. service sectors are wobbling on this fear of disruption, are we finally seeing the market distinguish between the companies building the AI revolution and the ones about to be replaced by it?
The hardware versus the software spread. That is the trend to watch. Thanks for listening to The Deep Dive.